All right, guys, what is going on? What up, man? It has been a pretty fun day. Hopefully you guys had some fun this morning. Every target was hit. 5 for 5. Do you like that? I told you yesterday, dog. I told you. Where's the liquidity? It's where I tell you it is. Big dog. It's where I tell you it is. I don't always get it right. Fair enough. But we had fun this morning, didn't we, chat? Drop some ones in the chat if you had some fun. Drop some ones if you had some fun. I should have stayed home, dude, because this fucking reversal was nice. I played this in here. I played that in here. We'll talk about it. We got a lot of shit to talk about today. A whole lot. Oh, it's Tuesday too, which means we got a market review later. It's gonna be a busy day, chat. Busy day. Know what I'm saying? Drop a like on the stream as well. For me, please. Do it. Yeah, today was very interesting. A whole lot of opportunities for reversals, for continuations. I mean, we had buy models, we had sell models. I mean, today was crispy, dude. Today was, in hindsight, today was crispy across the board. Now, mind you, staring at a 1 minute chart, trying to entertain you. ES this morning was a little, it was a little annoying in here, but look where that's at on the day. Look where that's at, dude. We were in there talking about we should trade higher. Come on, baby. I'm about to go shit on Bookmap all fucking stream, dog. Now I'm playing. I ain't gonna do that. I don't need to talk a bunch of shit. You guys saw it this morning. It's fine. It's out there. All right. But yeah, let's go over a few things. You guys ready for that? I told you earlier, I don't know what time. I think it might have been right around 10 o'clock. I really don't know. But right around 10 o'clock, I said Dow just creates another, or is creating more equal lows, right? What happened during lunch today? Where'd we come down to? Where the liquidity is. No Bookmap, no volume, baby. Come on. Because it's all about this right here. This is the Krabby Patty secret formula that everybody wants, that everybody can't have. Okay, it's right there. It's been there. It's going to stay there. Right there. Okay. Time, price, context. Time, price, context. All right. That's how. That's why. All right. So that's what we'll talk about today. We'll talk about time. We'll talk about price. We'll talk about context. And all three will fit together like a tripod. Okay. We got to get those likes up, dog. We got to pump those numbers up. You guys are lacking. I'm out here giving free fucking money, free trades, free bias. I can't get no likes, dog. I bet you I get more likes if I fucking charged your ass for that shit. SMS signal service, right? No signal service. No. Anyway, I had an energy drink and coffee, and then I was leaving the grocery store, and of course, who lets me in front of them? Fucking policeman, dude. I'm like, oh my God. It had to be HPD, dude. Man, I was already nervous to begin with. Now I'm in a brand new sports car driving in front of a policeman. Oh my God, dude. My fucking nerves right now. I'm shaking it. Between the caffeine and the anxiety, like, oh shit, I'm all over the place. That's why I'm hyped. That's why I'm talking a lot of shit. But anyway, hopefully I can relax. What's good? Mason, Robert, Monkey, Victor, Willow, Naruto, Sean, Ibranus, Shay, 2020, Bruce, Felix, Bazell, Flacco, Robert, Rich off the dip, Chris BJ. Got to break even. Well, that's better than a loss, my friend. What's good? Amin, Marshall. Noticing a lot of reversals. We get around 10 to 10:30. Yeah, why do you think I had this up on ES, the lunch hour? We're going to talk about that. Oh, what the fuck? Punk ass pop-ups. Damn VPN bullshit. They can have the formula, but they can't cook with it unless they come here. LOL. Yeah, you got to come here to learn how to cook, baby. You got to learn how to cook. You know what I'm saying? The recipe is not enough. It ain't enough. Was good, Harmon. Was good, Nikki. I mean, I was playing some loud music too, you know, so I was nervous. Oh my God, out of all the people who let me in front of him, it's got to be the policeman, dude. You know what he was trying to do. You know what he was trying to do. He was trying to run them plates. He was trying to, who's this guy? But he ain't find shit. I've had that car for a week. He ain't finding shit on me. But let me tell you something. I stared at the speedometer the entire time. The entire time. 9,000 in view? Yeah, but hopefully we get to 9,000. That would be cool. Because I don't really run ads, you know what I mean? What's good, Cameron? New phone got delivered today. Got the Google Pixel Fold. Well, you know, I don't really judge, but I might have to. It's like adding another screen to my desk. Was good, Kevin? I'm gonna just say Kevin because I don't know how to pronounce that other name. I'm sorry. Okay, so let's get down to business. If you were not here this morning, what we went over today was S&P, and we pretty much went over every move possible, right? Leading up to, because I want to say the stream started around 8:15, maybe 8:20, something like that. My voice was all, you know, morning voice, right? Y'all know how that goes. And right around 8:30, right, we started to watch equities open. And so before we got our open, I told you that I wanted to see us trade lower first. We talked about that low being taken, and then the pre-market low here, we talked about that getting taken, right? We rallied off of that, then we continued, beautiful. And then I talked about this being a potential mitigation model. I talked about when we hit that here and rallied off of it, I did say I didn't want us to trade back into it. But I also pointed out this imbalance in here. That's why I said it could be the mitigation model. But the part that I failed to realize in that few minutes, and again, I was half asleep, right? I know, chat. 5 for 5, half asleep. Yeah. Because price is price, baby. Get good. Get fucking good. All right. This ended up being the first presentation. So that's what I think kind of threw me off, because I thought initially the first imbalance in a reversal would be the breakaway. But I didn't realize until a few minutes later that that was the first presentation. So that idea would take precedence of it being the first presentation, right? So we ended up trading back into it, off of it. We sat through all this shit, and then we finally got the move higher. So we finally got that higher. And then I explained to you after the move was over that, or let me back up. During the move, I was telling you that there was things on the chart. I was looking on the left, and I was saying that there's certain things I'm looking at that I'm not going to mark up for you because I wanted to keep a clean chart. Any reason you don't run ads? No, I just don't. I mean, I guess I could, but I don't. One of the things, I was trying to see how far I could get organically, is what I was trying to do. One of the things that I was watching that I told you about later was this inversion. And that inversion was part of the reason why I didn't want to see us trade into that imbalance here. Okay. And then another thing later I told you was this up candle right here. Okay. So why those concepts? Why those concepts? Because if you were to view this as a what? Market maker buy model, you would know that what you sow, you shall reap. What you sow, you shall reap. Right? Old distribution becomes accumulation or reaccumulation. It just depends, right? This is accumulation. This is reaccumulation in the way that I view it. So manipulation, next candle entry, low risk buy, first stage, second stage. Okay. It's just the tail end of the first stage accumulation ended up being a run on that low here, right there. Okay. Does that make sense? So the consolidation is very wide. It has a big range. I won't argue against that. You're right. I think this morning I might have just said it was this, if I'm not mistaken. But either way, however you look at it, if you looked at it like this, fine. Original consolidation, distribution, or no, excuse me, distribution, redistribution, some manipulation, and then everything else. Okay. So you guys get that? And look, I told the stream at the end, go rewatch this morning's stream. It's real price. It's live price. Right now, you already know what it does. It fucking moons, right? It absolutely moons. But you have to see and study price in real time. I don't do bar replay. Okay. I don't do hindsight all the time. I teach with price beforehand. Okay. And so you saw me get a little bit wrong, like saying, oh, we shouldn't come back down here. And we did. So I'm not perfect. Okay. I'm not candle for candle for candle for candle. Okay. I'm not always like that good, but you don't need to be. Okay. You don't need to be. And yeah. So time, equities open, context, running stops, right? Price, mitigation model with the context that we should go higher. Time, price, context. See how that works? It's easy. Comes with the sports card territory. You're a target. Yeah. Yeah. Not fun. That's why I talked about hypervigilance a little bit yesterday. It is not cool. But it's okay. You got to pay for it. Whatever the cost is, that's what you got to pay. You long that inversion right above that mitigation, but that pullback got me out at break even. Nonetheless, analysis was right, and my upside targets got hit. That's a good observation. I mean, and that's exactly what should go in your journal. That right there. Maybe a little bit more details, time, maybe a screenshot, you know, something like that. That's a perfect journal entry right there. What's good, Jordan D? Did you expect this big pump today? No, I just expected 31 and that was it. I had no higher upside objective. For currencies, I did. We'll go over currencies in a minute. We'll go over there in a minute. Just relax. All right. We'll have a, there's a time to be, there's a time to teach, and there's a time to flex. All right. Sometimes I might do both, but right now I'm in teaching mode. Okay. So there was your time price context from this morning. And we continue higher and higher, right? We make a 1, 2, 3 formation. We don't come back for this low, and that's fine. What we do end up doing is rallying higher, but we left behind some lows. Okay, analyze those lows. Okay, there's only three things that they could be. Okay, there's only three ways. You understand? They are going to be one of three things. They're going to be, let's say, a higher low. They will be, this might not be perfect. Okay, they might be equal lows, or they might be lower lows. You understand? Either the low on the right is higher, either the low on the right is the same, identical, okay, or lower. Hold on a second. I have to make this straight. Okay, if you're going to do something, do it right. Okay? So there it is. You're either going to have a higher low, equal lows, or a lower low, right? So which one do we have? You've been using Notion. I started using Notion and then I didn't make it a habit, so I haven't used it in a while. But I am using Notion actually to finish my next book, believe it or not. So that should be done sometime this year. I've just been real busy. Was good, Big James? Right, Mason. We have a higher low, but I would actually say a slightly higher low. And it's just relative, right? When you're looking at it's just relative. Yeah, it's a little bit higher. This low up to this low, yeah, that's a higher low, but that's not close together. These two are pretty close together. To me, there's no certain amount of points or pips in Forex. You know, I don't judge it that way. I just judge it based on, is it close or not? So we have it's either slightly higher, equal, or slightly lower, or much lower. Like this right here. That's obviously much lower. Okay? Now, for the context part, and there's a reason I have lunch too, is coming in. But watch this. When we talk about external range liquidity and internal range liquidity, okay? When I talk about reversals, okay? Reversals are really good to target internal range liquidity. Something like this, right? Think about it. We were here this morning talking all that shit. Well, I was watching it trade higher, right? So somebody was long down here and it's trading higher and higher and higher and retracement and higher, retracement and higher and higher. Okay. So it's gone up like 40, 45 points from the low, you know, roughly, right? 46. Okay. So somebody is a part of that move. Somebody's riding the wave like a surfboard. They're riding the wave. They're riding the wave. But you guys already know what the market does. The market gives and the market takes. So the market is going to give you an opportunity to profit. But what happens? You hold on too long, the market starts to go against you, right? That's just how it works. More times than not. Okay? So what is the timing aspect? Well, the entire morning session, all the way up until just prior to lunch, majority of the morning session's been bullish. Anyone trying to short is getting clapped, right? Shorts barely in profit, boom, stopped out or stopped out break even, right? Shorts are getting their ass handed to them. Anyone who's been long, okay, trailing stops. If their stop was at the low down here, that looks horrible. If their stop was at the low down here, market trades higher, stops probably got dragged up to the low. Market keeps going higher. Probably dragged higher. Market continues. Anyone who moved their stop up really, really close to the market, they got tagged out here. And when it went higher, made a higher high, there's a short-term low here that got taken, then it continued higher. So now you have a very distinctive low, or excuse me, set of lows, right? Take a look at it. From the low that's been set up to this high here, where are the obvious lows? If it's obvious to you, if it's obvious to me, it's obvious to everybody else, right? There's an analogy in my head, but I'm not going to say it. Okay. When an attractive person walks in the room, everybody, draws attention, right? Damn you, Willow. All right, gentlemen. If there's a room full of gentlemen and a beautiful woman walks in, pretty dress, you know what I'm saying? It's obvious to everybody. Hey, beautiful woman just walked in. Right? If there's only one female and she's beautiful, all the gentlemen notice. Everybody notices. Right? Or vice versa, ladies. If there's a room full of ladies and a handsome guy walks in, maybe with a beard, I don't know. All the ladies go, oh yeah, it's obvious, right? So yeah, lady in the red dress, like in the Matrix, right? There's no other lows except these two. Those are the only obvious lows. Maybe one right here. But out of this entire price run, somebody's long, somebody's taking screenshots. You know how that fucking works. You take a screenshot, that's a reversal, baby. So what happens? All the stops, maybe not all of them, but a good amount of stops are dragged up to right there. Oh, support level. We'll put our stop loss just below the support level. Where's the market going? Right there. Right there. A little bit of a retracement to get like, oh yeah, we're going to buy that. Triple bottom. Let's buy it. Trades lower. Knocks everybody out. Goodbye. That is context. Okay. No book map, no volume, no fucking none of that shit. Nothing. Pure chart, pure candlesticks with just time, price, and context. That's it. Right? So what about these highs up here? Right? Oh, well, hold on, John. This is bullshit because these are low resistance highs. So I couldn't have shorted that. That's against the rules. This imbalance and that up candle, oh man, like that's bullshit. Okay. Okay. I'll refer to you back to the video from like 2 weeks ago, 3 weeks ago. How to trust when low, what was it? How to trust higher lows, right? So how can we trust that those highs won't get taken? It's because you didn't look at Nasdaq, did ya? No, you didn't look at Nasdaq, buddy boy. What's over there? Is that a lower high? Is that a lower high? Nope. That is a what? That's a higher high. So that is a divergence. That is manipulation to me right there. So what's after manipulation? Low risk short. First stage, second stage. Same thing. Same thing. Bunch of lows tied together at the very, very high end of the day's range. Look at that. If we measure from the low that's been set, whoops. The low that's been set up to that manipulation, look where you're at. Look where you're at, dude. Hell, the liquidity is at the 25% level. You're above that. So not only are you in a premium, you're above the premium end of the premium. Right? Let's talk about price for a second. We just went over that. Consolidation, run above an all high, then another one. Okay? Let me give you a secret. You guys want a secret? Drop a, I don't know where we're at. We did ones already. Yeah. Drop a 2 if you guys want a secret real quick. I mean, it's not a secret, but it's some really, really important shit. And yes, Naruto. I suppose so. I don't know. I think the ladies were looking at me yesterday when I got all that food. I spent like $60 on food for like 2 people. So I think they were kind of like, what is he doing? Then I whipped out the camera for the content. They were like, oh, that's what he's doing. He's one of them. He's one of those. Okay. So again, this was not something I created. This was not something that I discovered on my own. It was taught to me. And it is known as the turtle soup. Okay, it's known as turtle soup. It's very similar to the 1, 2, 3 formation, but it's slightly different. Okay, it's slightly different. So what do I mean by that? I don't call it turtle soup, but just for sake of, you know, honesty and shit, all that morality. A turtle soup short is a higher high above a previous high. Just like a turtle soup long would be a lower low that is below an old low. Okay, so I'll say that one more time because I know some of you are like, what the fuck did he just say? Again, let me explain it. A turtle soup short, all right, is a higher high. Okay, it's a higher high that is above an old high. You guys with me? Right? I don't know what. I don't know. Just drop a 3. Drop a 3 in the chat if you guys are with me. It's a high that gets taken, and then a higher high, which is above the old high. That is a turtle soup short. What I call shorting, what is it? Your stop loss is my entry, right? So how can you confirm something like that? Again, this is why we do relative strength analysis, right? We go back. Let's pull up ES. Why does the default look so shit? Sorry. Excuse my language. It just looks so bad. It just looks awful. I don't like that at all. It didn't used to be this way, but TradingView loves just trolling me big time. They're just like, yeah, fuck him. All right. So this is what I'm saying. ES, okay? Not making a higher high. Okay, the bodies do. You know, I won't argue that. The bodies definitely do. But the wick here does not. So we have NQ stabbing above an old high after a big run, right? Because we traded higher all morning up until almost lunchtime. Okay. 11:50. Okay, never mind. A higher high above an old high. That is a turtle soup short, which means you can, not financial advice, obviously, but you can short something like that. Okay. What's the stop loss going to be? I don't fucking know. Okay. There are ways to measure it. There's probably some on the higher time frame you can reference. I'll give you that. So don't ask me, oh, what's the stop loss supposed to be? I don't entirely know 100%. Okay. I didn't look at Nasdaq on a higher time frame today, so I wouldn't know. But what I would rather do is see that happening and go, okay, NQ's higher, ES is lower. Let's wait a second. Both of them have plenty of lows to attack in a reversal. But let's wait. Let's see if we do get some sort of sell-off. And then that's when you see it. You see ES drop lower, excuse me. You see Nasdaq drop lower as well. They stab up. Both of them stab up and into what? This is where some of you are probably going to shit yourself. Because all I'm doing is repeating myself. All I'm doing is repeating myself. If we take everything off, just remember that ES makes a lower high here, okay? Because I want to get rid of this stuff. What happens when you have two imbalances? Now, again, I was at the grocery store during this time. Yeah, 10:40? Yeah, I was sipping coffee right here. I was looking at it on my phone, but I was walking around like, you know, what's going on? What's going on? What happens when you have two? Chat. For those that don't have chat access who want to know, right? Oh, when there's two imbalances, what do? What do you do, chat? What do you do? Entry at the first one, stop above the second one, right? You play the lower one with a stop at the higher one. So that's the short right there. If you missed it, okay, don't miss this. Look at the market. Remember what we talked about a couple weeks ago, micro fluctuations, okay? That's just the name that I gave it. Okay, it's not something I made up. It's just what it is. It's a fluctuation on a very, very small time frame in the opposing direction of your bias. Man, John, that's a fucking mouthful. It is. It's stuff like this, right? When you have another candle, open, low, high, and close. Open, low. That's probably still an open candle. It's just a drawing, but it's, if we're bullish, right, we expect micro fluctuations lower to long to go higher. Open, down, long to go higher, right? And that same idea, you already know, it's been given to you here, right? Open, down, long, higher, close. But the opposite is true. The opposite is true. This one. Open, high, short, lower, close, right? So when we look at this and we understand this, what's right here? What about right here? Price respects the imbalance. Open, high, short, low, close. Open, it trades higher. What's it trading up and into? And this is where being a mentor is really fucking fun. It didn't go to the higher up close candle. I thought it was supposed to be that one. Nope. It didn't go to that. But it did go to these two. Or three, rather. But that's kind of a bitch-ass candle. These two have the bodies. Okay? Don't write that down. There's no bitch-ass candles. Okay? It's just that one's, the body is, there's no body there. So these two put together. What's that right there? Boom. Up candle short. See that? Imbalance is an opportunity. Up candles there is an opportunity. Imbalance here. I know it does spend a lot of time there. But now you're approaching lunch. Okay? Because what's it aiming for? The lows that we already established. Well, all of these. These two are the cleanest, but if we extended out here, there's an imbalance down here too. And so what does it reach for? All of that. Right? So what do we have here? Breakaway. Imbalance. This is also a mitigation model too. Well, hold on. I lied. It's not the mitigation model, but it is a mitigation here. Okay? You see that down candle? That down candle closes below that one. So it trades up and into the mitigation and the up candles. This imbalance is where? Inside that mitigation. Remember? Remember? I told you, you don't have to wait for a concept to be disrespected before you can trade it. That imbalance, even though it hasn't traded below the mitigation yet, it's still inside of it. That can still be a short. Are you guys impressed yet? Are you impressed by just look, I can't take credit for a lot of this shit. Okay. I didn't make this stuff up. There are certain things that I did discover on my own just through, I mean, fuck, 11 years of doing this, or I'm in my 11th year rather. I'm 10 full years. I'm in year 11. And you come across certain nuances and certain things, and you start to see concepts that come together. You start to see time, price, and context, and you start to see shit like this. Like, oh, it didn't trade through the mitigation yet, but that is the first imbalance, would stop at the second. I could trade that. Or if I missed that, I could trade this. Or if I missed that, I could trade this. Now, this is kind of janky in here, but it trades to the high end of the imbalance, drops off. What's happening right here? What's happening right there? Up candles at 11. So 11 opens, trades higher, lower, right back into those two up candles right there. Boom. See that? Trades lower, up, back into this imbalance. It already traded lower many, many times, and it's getting ready to do what? Trade below those lows. And it viciously and violently trades there. Imagine being short. Imagine being short and the market takes an absolute dump, 30, 40 points on NQ. That's $20 a point. That's $800 in less than a minute. A contract. $800 in less than a minute. And there's not a single 9 to 5 out there that's doing that. Not a single one. So who's to say, as a study, who's to say you couldn't short that, add here, and hold? I taught you how to pyramid. I taught you how to pyramid in the Market Maker Models Masterclass. Didn't I say that? Biggest positions near the high, adding on the way lower, or adding on the way higher if you're long. Didn't I tell you about that? Of course. We could say this looks shitty, and some of you might disagree with me, and that's fine, because sometimes the models, the drawings can be a bit ambiguous. I'll give you that. Consolidation, that run higher here, and then that run higher here, that was manipulation. I already explained that. Remember ES going lower, ES lower high. So why would Nasdaq trade higher? Because it's manipulation, it's distribution. So that is the Y slime model. Low risk short, first leg, second leg of a sell model. You guys see that? So that's it right there. There's your market maker sell model. We could even say this sort of trades outside the lines a little bit. If we were to count that as accumulation, I mean, it does trade outside of that a little bit. It's just a 1 minute chart. We haven't seen anything on a 5 minute, but old reaccumulation becomes distribution. So yeah, manipulation, low risk short, first stage, second stage. See that? Is this not cool or what, dog? Is this not cool or what? You let me know. Price retrace to the daily opening gap on NQ to continue higher. Would that be something to note and look for in the future? Absolutely, Brian. Absolutely. I did not even bother looking at the daily today. And I know that's crazy. Oh my God, what? John, you talk about top-down analysis all the time. Well, yeah, but If I see a market maker model at the right time, price, and context, I don't give a fuck what the daily's doing. Look at the daily. This looks shit. Hell, if anything, I'd want to be bullish overall just because of these highs up here. You know what I'm saying? This has the potential to continue another 400 points, 500 points over the next couple of days. It's Tuesday. Monday, potential Monday low of the week. Buying below the open on Tuesday. Maybe we launch Wednesday, Thursday and trade up here. You know what I'm saying? And yeah, Mace, I did the same shit. Went grocery shopping instead of, you know, doing something like that. I did short this earlier. That's when I said scalping opportunities here on NQ, and I did end up getting it wrong. I got stopped out in profit. I mean, nothing crazy, but I was doing the same thing here or here. Okay. This was a very small time frame sell model, which obviously it extended into a larger one, but you don't know that until the candlesticks print. But what I was doing was being very, very precise, being very careful about where I'm entering. And I had entered right on that, on this candle here. So we had stabbed up into that imbalance and then a little bit off of it. Bam, market short. Instantly my direction, a little bit against me. There was a gap right here. I'm like, I'll allow for that. Then we trade lower. I'm like, okay, cool. We're going to run for those lows. That's why I said scalp opportunities here. And then unfortunately it came up and then I got stopped out in profit. So, I mean, it wasn't the greatest. And then the market traded lower. I'm like, oh shit, it's fixing to grab those lows. And then it doesn't, rallies higher instead. So I'm like, it's cool. But even on something like this, you got to realize you might not think that this is a lot. But even at those lows right here, that's 30 points. 30 points. Oh man, that's 30 points. What the fuck, John? 30 points. That's ass. Don't forget, bro. NQ is $20 a point. So what's 32 times 20? Probably 600 and some change. That's $600 in 10 minutes. So don't tell me, oh, those moves are small. Your logic is small, big fella. All right. So anyway, there was shorts in here, in my opinion. Obviously it didn't go well. Then we got the divergence with ES and NQ with open lows. So the lunch hour is what took us down there. Lunch is here, 11 to 12, in the way that I view it. Okay, I've always told you, this is how I view the lunch hour, 11 to 12 Central Time. Okay, when did we run for the internal range liquidity? During lunch. So lunch was a reversal. But the opportunities to short were prior to lunch. What's right here at 10:45? I forgot to mention that earlier. Actually, let's do this instead. 10, 10:15, 10:30, 10:45, 11, 11:15, and 11:30 just for shits and giggles. I think I did that twice. $10, $10:15, $10:30, $10:45, $11, $11:15. So what's right there? What's right here? Remember we broke this down a couple weeks ago? The open of the last 15-minute candlestick. See that? Shorting above the 15-minute open. Yeah. Low risk short above 15-minute candlestick open at an imbalance after manipulation on the way to opposing liquidity. That's not fucking bad, is it? That's not bad, is it, chat? See that right there? That wick. Let me take this off because you see it now. It's right here. 10:15 up into that up candle. There it is. There it is. 15-minute open, shorting above the 15-minute open, shorting above the 1-minute open. Boom. A little bit of retracement, and then eventually the continuation, or rather, it's overall a reversal, but I'm saying it continues lower to go for these lows. And then, like I said, there's an imbalance below these lows. There's one right here. And then if I didn't see this earlier, to be honest with you, but there's a gap right there too. Look at that shit. Where does price magically go to? Where does it just magically fucking go to? The gap that's right there. Boom. I wouldn't have held for that, to be honest. I would have just said, hey, as soon as we get that low, I'm good. That's like $1,000 right there. Maybe actually probably more. Yeah, probably more, like $1,500 right there. Boom. I wouldn't have waited for that. But all I'm saying, chat, are you learning? Drop some 4s if you're learning something. You're learning market maker models. You're learning reversals. Today I taught you something that other people call turtle soup. It's a higher high that is above an old high, or a lower low below an old low. That's a turtle soup long. This up here was a turtle soup short. Okay, turtle soup short. Right there. So you may not have to trade that. It's okay. You don't have to. I don't. I almost never trade the turtle soup, short or long. Never. I haven't done it in years. Yeah, I think so. I don't know. It's been a hell of a long time. You don't ever have to use it. But if you know about it, then you know, oh shit, that's a turtle soup short. Now I can trust my stop loss up here or above the imbalance. Does that make sense? Because I can tell you, this is what you're going through right now. You want me to guess? You want me to guess, chat? I'll take a wild guess, all 63 of you. I'm going to take a guess that 80% or more of you are not comfortable with placing a tight stop loss. You're not comfortable putting your stop at the high end of that imbalance, shorting this. You're not comfortable with that. You might put it at the high. I think Liquidity does that. And there's nothing wrong with that, leaving it at the high. But my guess is that you're not comfortable with having a tight stop loss at the high end of a mitigation. Drop some 5s if I'm right. If you, like, you can trust trading. Like, you can trust entering or trading a combine. Like, you can trust, okay, I'll take this setup, I'll take that setup. But you don't trust having a super tight stop loss. You trust having your stop way above the high, or way at the high, excuse me. Or if you're trying to long, like ES this morning, instead of having a stop, let's say at the low, right? Like, you would trust that stop. Buying this with a stop loss here. But you wouldn't trust saying having a stop loss like right here. Buying this and stop loss right here. You wouldn't trust that. Or if you did it, you would be nervous. You would be like, oh my God, that's a 3-point stop on ES. I don't know. I don't know. Why don't you trust it? It's a mitigation. If it is a real mitigation, majority of the time it won't trade to the low end of it. And so you're basically saying, fuck, I can't be that precise. And I'm here to tell you, yes, you can. Now, don't get me wrong, it's not easy. It's very hard to get to that type of level. Okay, and sure, sometimes I still have my stop at the high. Let's go back to thank you. Sure, sometimes I'll still put my stop at the high, or maybe the body. Because sometimes I might allow, like, oh, maybe it hits that imbalance and then goes. But sometimes you'll just see me enter and then poof, right the opposite direction. No drawdown. And then it's like, okay, cool. Now we can go break even in a minute, 2 minutes, 3 minutes. Now you're in a high probability trade where you spent no time in drawdown, or maybe your stop is in profit before you leave the house or something. That's the best way to do it, baby. In my opinion, that's the best way to do it. We haven't done shit in like 20 minutes, 30 minutes. But anyway, I'm comfortable if we have a divergence, Mason. Yeah, with context, I would agree. Pop's the opposite. He said, I think I'm way too comfortable with having a tight stop loss, but for the wrong reasons. Well, I'm not saying that you do. I'm not saying that you have to have a tight stop loss. You don't. But when you understand every stage, right? Oh yeah, first imbalance should be breakaway. That's why I trade the first one with a stop at the second. That one's also inside the mitigation. Also, we had a higher high divergence with ES. And we've rallied all day, so there's no way this should continue higher. And that's an 80 level up here too, right there. 680s right here. You see how they worked that 80 level right there? Look at that. 80. They worked it. They worked it again. And then, not really right here, but they worked that 80 level. See what I'm saying? Smart money distribution. And then the intraday reversal. Make sense? So yeah, you can short on an up day. You just got to be careful about how you do it. Yeah, Brian, you're banned. You're banned. Biggity banned, Brian. First month. Get him out of here. The 1 2 3 as well. Well, yeah, similar. But this was a 1 2 3 formation here. And then it extended right there. But this is why I brought that up. This is why I brought up turtle soup, because that's to me, that's exactly what it is. It's a higher high that's above an old high. That is a turtle soup short. But it would be hard to come to that conclusion if you didn't reference ES. If you didn't reference ES. Does that make sense? So like if it was me, because ES failed to make a higher high, I would have trusted ES shorts more than NQ. NQ would have paid more. NQ would have paid more, obviously. I mean, I gotta eat, dude. I can feel my stomach high-fiving my backbone right now. 2 imbalances, right? Taps into that here, drops lower, trades up there again. If you left your stop open, it wouldn't have got you. Or this as a later entry there. And then it sunk to down here. So that would have been $650 or something like that. But look how small that stop is, from 61 up to 66. That's 5 points. That's $250 a contract. That's $250. That's reasonable. Especially for a combine that a lot of you are trading now. Hell, if anything, you could have took 2 contracts. At a 5-point stop, yeah, $100 a point. That's a $500 stop loss. Yeah, you would have easily been able to get at 46, even 45 from 60. That's 15 points. Oh hell, I don't know what that. Oh, that's $1,500. So you would have risked about 500 to make about 1,500. That's pretty reasonable. Hell, you don't need 3K to pass the challenge. You only need 3,000 to pass the combine. You got half of it right fucking there. Shorting in an up day. Come on. Yeah, Naruto, I agree. Wix can trade outside, just like ES this morning. Wix can trade outside of whatever concept you're looking at. Well, except I don't like when it trades outside the imbalance. I don't care for that. But like a reaccumulation, it definitely can. The bodies are stopping right inside of it. Now, these might have opened at the low end, but they're closing all inside of that. Does it make sense? So that to me is pretty good. That's pretty good. Yeah, but that's all it's stabbing into. It trades outside the reaccumulation. And it's only stabbing into short-term low. It's only stabbing into imbalance. It's only stabbing into mitigation here. So I agree. The wicks are the ones that do the manipulation. The bodies are the ones that tell you like, okay, the close is good. So yes, that would be accurate. Two contracts would have me sweating, Mason. I mean, if it was me, I can tell you what I would have done. I can tell you exactly what I would have done. If I would have shorted two, these lows here, and then this imbalance right there, that would be one off. And at 61 down to 54, that's $350. I would have just taken that, held the other contract, and the other contract would have went break even. That's probably what would have happened. Honestly, I probably wouldn't have waited for this. I would have said, no, fuck that. Nah, I would have held the other contract open, but I would have pushed that stop to the entry like as soon as possible. And that would have not done me okay. That wouldn't have been okay. How far can price go below a low, chat? Imbalance. Boom. Look at that. Why is it that everything I keep saying keeps panning out over and over again? All these little nuances. Which imbalance to trade, which up candle to trade, what timing aspect of it, how far can price go below lows. This stuff keeps happening over and over and over again. And we didn't even go over the other shit. We didn't even go over British pound. Both of those targets hit. I gave you 24.55 as the first objective. And yesterday, I told you about these highs up here at 24.77. Both of those got smacked. And this morning, I gave you that. Because I talked about these up here. These, oh no, that was a 15-minute, I'm sorry. I told you about this candle right here. I said, I want to see if that becomes a mitigation or reaccumulation. And sure enough, it traded into that by like a pipette and then launched. Fucking launch pad. Easy. I told you about New Zealand. I told you a 56.40. Right in there. Let's go to 1 minute. This was after the fact. But I gave you New Zealand higher. And then at 8.40, we got the mitigation play. Lower low. Up candles here. Trades right into that at 8.39. And then launched. At 9 o'clock, we had job jolts. We didn't get there. We were chased a little bit. And then we got there later. So New Zealand hit. British pound hit. ES hit. Dow Jones hit. 5 for 5, baby. 5 for fucking 5. Where's the liquidity? Like I said yesterday, baby, it's where the fuck I tell you it is, all right? Y'all be blessed. Y'all have an amazing day. I will be here same time, same place on Wednesday tomorrow. All right, tonight I will put out the market review for members of this community. If you are not a member, you can sign up today. It's only $25 a month. I will not sell you a course. I will not sell you, some expensive shit. $25 a month is the most you will ever pay. Okay? That's it. That's it. All right. Be good. I'll see you tomorrow.